The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Hey everybody, I'm Tommy O'Brien coming to you live from TFNN Wednesday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and the market's picking up in the negative territory right now. A little bit of a bid off of where we were just about an hour and a half ago. Lows at about 39.14. Right now, you're trading 39.35. We just dipped below the lows of yesterday. And boy, you take a look at where we are, folks. You just put things on a 15-minute going back. Talk about giving up about 200 S&P points. 200 S&P points. That's about a 5% pullback, folks, from where we were trading Thursday morning, from where we were Wednesday evening, almost from where we were on Friday. You're talking about a move of 100 and about, what are we talking about, 165 points from where we were Friday, talking about 4,080 down to 39.14. This market continuing to struggle to find a bid across the board right now. You get the NASDAQ 100. We're down 56 points right now. That's about 0.5% at 11,508. You get the Dow off 19 points right now, trading at 33,614. The Russell negative by just 2 points right now at 1811. Bitcoin 16,800. We were above it 17,000 briefly overnight. How about crude, man? 72.75 yesterday. Crude gives up $10 from where we were on Monday. Right now, you're technically flat on the session, but volatility continuing in the crude contract. Gold contract positive by $8. You see the action on gold, though. Really, since we opened Monday morning, gold with a pretty tight trading range right now of about $10 from 1780 to 1790. We're near the top of that range right now in the gold contract. Just for some consideration, okay, when you look at where we are, gold, 1795 would be the 382 of that move lower. You almost got up to that level on Tuesday. We're climbing towards that level right now at 1790.30 in the gold contract right now. You jump to notes and bonds, a little bit of higher price, lower yield. Now, keeping your eye on the 10-year right now, 114.19. You're trading higher, up 8 ticks. You take a look at the 10-year, right? Critical area in the 10-year in terms of, do we break above this area? Is this an area of resistance? This is a daily chart on the 10-year, basically going back to the beginning of the year. You can see pretty well-defined channel line bumping up against the top portion of that line right now at 114.5 basically. And yeah, we'll see where we go on the 10-year. The 30-year up 21 ticks right now, pretty similar on the 30-year. And as you see, the last time it made this area, you got a little bit above it. We're breaking above it right now. We'll see if it holds on the 30-year, up 21 ticks at 131.02. And we jump over to the volatility index, man. All things considered, I mean, I just told you, folks, we basically got a 5% pullback going on in the markets. You have seen a slight rise in the VIX. We're talking about a VIX coming at 2269. And guess what, folks? We're 1 week out from a Federal Reserve rate decision, press conference. A week from today, Wednesday, December 14th, we get retail sales. On Thursday, December 15th, right after that, there's a lot to come in this market right now. And keep in mind as well, we're sitting at 39.33, folks. Okay, quite a pullback over the last 4 or 5 days. Doesn't seem to let up just yet as you get the S&Ps down by 12. But all things considered, I mean, you're basically back to prices we were trading at in May, 7 months ago. And I would say that things have not played out fairly well over the last 7 months. Yes, you have the Fed saying, you know what, maybe we've had enough 75 basis point hikes that we'll go 50 this time. But they've also reiterated over that time it's going to be higher than the market expected. We're going to have to keep it there for longer than the market expected. Dicey area in this market right now. I went over on the show yesterday, all right? If you keep in mind in terms of where we are, now, real quick, I'm going to back things out big picture, okay? You're talking about a Fibonacci retracement. Folks, 3,200 is totally possible in this market, man. You know, keep some powder dry would be my opinion, because you get to 3,200, yeah, there's nothing saying this market can't go lower. But boy, I like that buy a lot better than I like the buy at 3,900 right now, coming into a year that a lot of economists are talking about might be a dicey one in 2023. That's the fundamental take of things, okay? The technical take of things is that we got a lot of 618s going on in this market, man, and it would not be outlandish for this market to come back and test the areas of late 2020, test the areas of where we began 2020, and test the area that is a 618 of the entire move higher from 2174 to 4808. Now that's your 618 on the larger term, okay? Went over this yesterday, but it's an important one, folks. So I'm going to do it again today because these 618s are everywhere, man. You take a look in terms of where we are just recently, okay? Now, I'm taking the bottom of this consolidation that we had basically from late September to the middle of October. Where did we climb up to? Yeah, you got above that area, okay? The 618 was about 4,043. You got up to 4,100, okay? But boy, pretty close to the 618, and I point that one out because in particular, what did we do on all the other runs that we had in terms of what kind of retracements did we have before you trade lower? You got just above the 618 in August, and you gave it up, and that was of the prior move from March to June. You traded all the way above the 618 back to a high of 4278, and then boom, just like that, you gave up 800 S&P points, folks. It moves quick, so don't take your time if you want to position anything in this market, man, because from August 16th, you were trading at a price of 43.27, and boom, just like that, a month and a half, you were down to 3,600 about in the S&Ps. Now, there's your one acceleration. But guess what? This one as well, folks, the first acceleration right out of the gate this year. You trade down. Yeah, I guess that got a little bit higher. Nonetheless, in the ballpark, right? In the ballpark of the 618s on this on these moves. And just keeping in mind, man, because we got up to that level, we've chopped around a bit, and boy, it's been a pretty decisive break lower from that area. We're now trading at 39.32 as this market struggles to find a bid. And as I said, yeah, you got a little bit of a pop going on, but all you're doing, folks, is chopping around at the lows of yesterday. And it was a one-way trip, man. From 9 in the morning, you got one itty-bitty green bar at around 11:15. This is a 15-minute basis, folks. You don't even see this often on big days to the downside. From 9 in the morning, 9:15, let's be exact, from 9:15, so from 15 minutes prior to the open yesterday, all the way until 1:30, there was only a 15-minute period of the day where you actually traded higher. Not what you want to see, folks, to say the least. We'll see where we go from there. It is a dicey one, though. Dollar index this morning, pulling back a bit to about 105. You got a little bit of a pop yesterday. We're seeing some negative action in the dollar index. Dollar index, you put that in a little bit of a longer-term chart. You talk about a decisive break out of that channel line. The dollar index basically back to where we were in May at 105. You check out the euro-US dollar this morning. Euro-US dollar trading at 105.33. Again, basically back to where you were in April, May, chopping around on the euro. So much for 95, man. So much for where this tested the trend line. Basically about a month ago, November 4th, remarkable. From 97, we're at 105, and you got to check out the yen, man. Dollar yen this morning, 136.63. All of those breaking well out of those channel lines. It's going to be an interesting Wednesday, folks, as usual. We're coming off a lot of strength to the downside right now. There's your 15-minute chart. There's your Friday action on the jobs number, and it's been a one-way trip, man, to negative prices from 4,080. We almost made it to 3,900 overnight. We're trading at 39.34, still negative by 10 points on the S&Ps this morning. Stay tuned, folks. We'll be coming back talking to our man Kevin Hincks from TD Ameritrade Network Fast Market. We'll be talking to our man Teddy Kegstad coming up at 40 past the hour. Always enjoy having Teddy on. We'll talk a little bit of Forex. We'll talk a little bit of crude. Interesting action in the crude market. Stay tuned, folks. We'll be right back in 3 minutes. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Shame on me. I had a nice little intro going, Kevin, and I had my mic muted. So let's just jump into it, folks. Kevin Hincks, every trading day, 12 noon Eastern time on Fast Market. Kevin, good morning.
Good morning, Tommy O'Brien. You know, interesting day setting up here. Not a lot of top-tier economic data, but the markets are moving after 2 hard days on the downside, Tommy. And why? If you notice, bonds, notes were down this morning. Now they're up, Tommy. I think that comes off the productivity and cost number that came out at 8:30 Eastern time. Unit labor costs. Tommy, this is a number, unit labor costs, that got up to early in 2022, 8.5% and 8.9%. Well, this number came in 2.4%. So much lower than last month at 3.5%. and much lower than expectations of 3.3. So some pretty good news on the inflation as unit labor cost, the cost to make goods and services, is coming down, and non-farm productivity is inching up, Tommy. So pretty good news there. Mortgage apps that came out today after some volatility around Thanksgiving week. Refis up 4.7%. Purchases down 3%, though. Overall down 1.9%. So some news there, Tommy. But, you know, this is a market that is watching the U.S. dollar. Remember, the U.S. dollar got above its 200-day moving average yesterday for a while, now significantly below the 200-day moving average. So you've got the dollar lower, you've got yields now below 3.5%, you've got crude oil hanging out just below, right around $74. And, Tommy, this is a market that needs to figure out if it's just going to, 2 weak days, all this macroeconomic pressures on the market are pretty positive. So if we don't rally today, that's starting to be concerning about the overall health of this economy.
You make some great points, man, some great data points this morning. I had a chart of the 10-year up there as you were talking about it on the Thinkorswim platform. Quite a move we have going on this morning. And it is interesting, Kevin, that it's kind of and this is my take, man, it's pretty interesting that every single day we're getting data points, it feels like. And it's not every day, man, but when you back it up to whether it was Wednesday with Chairman Powell, whether it was Friday with the jobs number, and then we had ISM, and now we have the data you're talking about this morning. And we're only a week out, Kevin, from when we have a Fed decision and a press conference. 50 basis points is the consensus right now, but as we know, we'll see what the chairman has to say. You go right into retail sales on December 15th on the Thursday week from tomorrow. And then we're 10 days out from Christmas, man. I'm always amused when I see the headlines, whether it's CNBC, and not a fan of CNBC at all, but say markets trading lower on risk that Fed going to tighten or loosen more. I'm like, how are you going to peg what is driving this market? So many variables in play right now. You laid it out pretty well right there in terms of what is driving this action. What do you think about, Kevin, as we go into the end of the year? So we have a Fed decision a week out. We get retail sales December 15th. Where does this market go in your opinion? You made a great point today in terms of, I would say, we're almost 5% off, Kevin, from where we were, whether it was the high of about 4110, but we've traded down almost 200 S&P points from where we are at 4,100 almost to 3,900. So we have almost a 5% pullback going back. And we have a VIX that, yes, it's still elevated, and it's elevated this morning, but you're only sitting at 22, Kevin, and we just got a 5% pullback essentially in the market from the highs that we had a week ago. What's your feeling on the VIX right now, sitting at 22? Elevated, per normal times, but really not that high compared to, we're basically sitting at where the VIX was a week ago on Thursday.
Yeah, you're right, Tommy. There is a lack of excitement about this market right now, and I think you're seeing that in the inability of VIX to get any real lift. And so what does that mean as we get the second week in finishing up the first week in December? There might be a lot of people moving to the sideline earlier this year than even normal. And so it's going to be interesting. By the way, we'll get a CPI number as well, not to mention consumer sentiment on this coming Friday. So a lot of data points still for Jerome Powell to see. We'll see, though, if his comments about letting the 475 basis point raises take their effect on the market and lightening the. We'll see how he describes it, Tommy, and see if we get one of those end of the year rallies. But after a resilient day on Friday, the data kept coming out stronger, and boy, we'll see what happens over the next couple of weeks. But Tommy, right, there seems to be some apathy about the overall market right now. It's moving, but there's just not a lot of things going on here.
I mean, I'm struggling to find a reason to be an avid buyer right now with the S&P. This is my personal take, folks. At the S&P at 4,000, at 4,100. When we got a long way to go, man, with inflation. We got a Fed that's pretty strong in the wording that the chairman's been using, man. Yes, we're going to go to 50, folks, but in any other universe, if the Fed is hiking at 50, the market's a little freaked out. Right now, we're going down from 75, but some pretty strong words in terms of the Fed and their attitude towards rates going forward for the next year. With that in mind, Kevin, you talked about it. We got some good companies with earnings potentially tomorrow, but we're pretty dry on the week right now as we're coming into the end of the quarter, end of the year. What are you guys talking about on Fast Market at 12 today, Kevin?
Yeah, portfolio is going to cover Chewy, which has earnings coming out tomorrow after the bell. We're going to cover them a day early just because, we have so many coming out in one day. But then we're going to look at, in the first segment and the last segment, we're going to look at Expedia and Airbnb. We got some news coming out on Airbnb this morning about overall worries about inventory for them to rent. So we're going to cover some travel stocks in the first and last segment. Like Folio is going to do Chewy today, Tommy.
Yeah, Airbnb and Expedia as well. I pulled them up as you were talking about it, man. Airbnb from $93 looks like they're going to open down about $4 to $90. Maybe what you were talking about there, some of the news that's driving that action. And Expedia, man, you talk about a pullback from $217 early in the year to $96. Travel, definitely an interesting one. Still something people want to do. But boy, the world is changing in terms of costs out there for travel and for stays. Kevin, I appreciate the time on a busy morning as always, man. We'll be watching at 12 o'clock today, and we'll talk to you tomorrow, man.
Have a great day, Tommy.
You too. Folks, tune in every trading day. I tell my friends, I tell my family. That's what I was talking about when my mic was muted, man. Check out Fast Market if you want to learn anything about options, folks. Outstanding program with Kevin, Tom, the whole team. They walk you through 3 hypothetical trade setups. And yeah, we're a little bit dry in terms of earnings coming out, but that doesn't mean that you can't trade options, folks, or understand how it's moving. And yeah, you talk about some stocks with volatility, man. Expedia, you see that pullback, man, from 40 to 217 over the COVID rally. You're back to 96. And Airbnb changing the way that we travel. But boy, you talk about a pullback, man. And yeah, we'll take a little look at this one because well below their IPO price for Airbnb. Stay tuned, folks. We'll be right back. Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps open down about 10 points right now at 39.35. I got a weekly chart here of the S&P futures, and yeah, things seem like they're a little bit dire, right, in terms of the volatility we've seen over the last 2 or 3 days. Folks, you take a look at this chart, right? If you think this is how a disaster looks on a chart, that's not how it looks, folks. All you've done is you've given up basically, the last 7-8 months of the last year. If you came into COVID and you said the market was going to be trading at 4,000 from 3,200 in a few years, especially after you saw the decline, what would you say? You'd say, whoo, we got it made, man. Yeah, so keep in mind context, very important in terms of where we are. We've traded down about 5% over the last few days, but again, context, very important. Okay, jumping around to some other stories, we're going to talk a little bit of baseball, man. How about it? So, news breaking this morning, you got Aaron Judge staying with the Yankees. For you Yankees fans out there, I'm a Red Sox fan. So, hey, they can spend $360 million for 9 years. That's the price of baseball, man. You got to love it. Boy, as somebody who is not a huge fan of just watching baseball because it's slow, that's the truth of it, man. It is a slow game. They're trying to speed it up. But you got, 162 regular season games. So I often joke with friends that basically the regular season meaningless. You go there and watch a 4-hour game that in the grand scheme of things, especially early on in the season, it's not really that important. I mean, think about it, folks. They play 10 times as many games as the NFL. Think how exciting baseball would be if the season was 17 games long, right? Every game would be a thrill, just like the NFL is. That's kind of part of the problem with baseball in terms of the exhilarating fact. Very tough to be exhilarating with 162 games out there. But nonetheless, Judge, it was fun to watch, man, when he was putting up that home run record last year for the AL company, for the AL home run record, when he hit 62 home runs. Even as somebody that struggles to be excited to watch baseball, that was pretty cool to watch. What he did, pretty extravagant and amazing as a baseball player. And it's even more amazing that he did it when he turned down an offer from the Yankees. He had 1 year left. Now, what any team will normally do, folks, is if they have a big player, right, the last thing they want them to do is to not have a contract and enter the last year of their contract and play it out. Because what does that do? That pushes them into free agency. A lot of players won't want to negotiate that during the season because it's a huge distraction, okay? So they didn't get the deal done before last season. And what did Judge do? He put up one of the best years we've ever seen since the home run rally of the steroid era, okay? Now, I'm going to walk you through a couple ones because this is just interesting stuff, man. So last year, at the beginning of the season, you had negotiations going on between the Yankees and Aaron Judge, okay? They're in private, of course, okay? And what happens is that you have Cashman, the GM, the long GM of the Yankees, come out, okay? And he took a rare step of publicly revealing that Judge had turned down $213 million to stay in the Bronx for the next 7 years, all right? And this is Judge. He says, we kind of said, hey, let's keep this between us. I was a little upset that the numbers came out. I understand it's a negotiation tactic. It puts pressures on me. It turns the fans against me, turns the media on me. That part of it I didn't like. Okay, now, of course, Cashman doesn't reply. Well, what does he go on to do, folks? He goes on to put up one of the best seasons that we've seen in recent time outside of the steroid era, man. And what does he do? He makes himself about an extra $100 to $150 million for doing it. So congrats to him. He turned down $300 million for 8 years. He ends up getting $360 for 9 years. The teams that ended up being in the bidding, the San Francisco Giants were close. The San Diego Padres were close at the end there. But nonetheless, he ends up that he wants to stay with the Yankees. And yeah, they played some hardball, man. The Yankees did, and they lost to the tune of, 9 figures? $100 million plus by trying to squeeze him. And he said, you know what? You can't squeeze me, man. I'm going to walk in there and I'm going to have the best season I can have. And he crushed it. He bet on himself and he got it done. Pretty cool how that happened. Now, just looking at it real quick, another tweet. He bet on himself when he turned it down. 62 home runs, an MVP, and an extra 2 years, and 146.5. And that's an extra, okay? I mean, look at the numbers. It's 213, an extra 146. What is that percentage? I mean, what is that? An extra, geez, 60%, 70%, what is it? I can't even do it. 70% he made, one of the greatest bets you'll ever see, man. So congrats to him. He put a whole emphasis on baseball that nobody had in a while last year, and he got it done, and he banks 9 years at $360 million, and the Yankees keep him on the roster for 9 years. I think he's 30 years old. Baseball, you got to love baseball, man. Baseball, guaranteed contracts, all of them. Baseball union, they're the toughest union out there when it comes to sports especially. And, I'm digressing from the market, folks, but this is finance right there, okay? That was a bet, all right? Everybody talks about gambling. That's a straight-up gamble, folks, okay? And guess what? He gambled and he won. A lot of things in life are gambling. We associate gambling with negative expectation because we associate it with casino games. But boy, when you're starting a business, folks, when you're trading, okay, in the short term especially, you're gambling. You're putting money at risk with the knowledge that you might lose money, with the effort to think that in the long run you will make money. That is the essence of gambling, straight up, man. And he got it done. Now, football. I'm gonna give my little 2 cents on football. Okay, football contracts are not guaranteed. The NFL, they really got it over on the players. They are not guaranteed. And so what you often hear, and this is one that I always bring up because football players, they really catch a lot of grief when they don't deserve it, from the coaches, from the owners, especially when it comes to negotiations, okay, is that what happens is that imagine that football contracts are not guaranteed. So somebody signs especially the rookies, man. The rookies, they really get hosed, especially those rookie running backs, okay? Because a running back in the NFL, man, they are just a commodity. They run those guys into the ground while they're young, okay? And then the next guy comes up who's just barely as good, okay? And they want them on the rookie contracts because they're nothing. So what happens is, let's just say you have a contract for a football player, and it's a 4-year contract at $5 million a year for $20 million. Okay. Now, what happens is that the NFL owners have the ability to break that contract by letting that player go. But for some reason, the players don't have the ability to break that contract if they overachieve. So if the player underachieves, the coach or owner, I'll say the owner, says that contract's no longer valid, you're fired. If the player overachieves, the owner says you got to abide by the contract that you made. That's why you see holdouts, and that's why you should see them all the time, and that's why you should respect them all the time, in my opinion, folks, okay? When you see people saying, hey, man, you signed that contract, why aren't you going to play out? Remember that the system is rigged in the NFL, man. You got these young guys, especially at the running back level, okay? You see the people say, hey, man, you're a running back, you signed this deal, you got to live up to it. It's not a deal, folks, because the owners don't have to abide by that deal. They just fire the players if they underperform. And if they overperform, they get all the value. It's a rigged system in the NFL. So pay attention to that one. It always frustrates me when somehow players take heat, right, for wanting a new contract. Folks, NFL owners, teams, they can players all the time on contracts because they're not guaranteed. So when you see that happen, I'm always giving kudos and credit to any of those players who are holding out, especially those running backs, because, boy, the NFL, you have very limited time in the NFL to make your money, especially at the running back level. All right, folks, check out that rip, as Dudette says in the den. Check out that rip higher. S&P's up by 8, NASDAQ up by 18, Dow up by 46. Stay tuned, folks. We're coming back, our man Teddy Kegstad. We're talking some Forex, some crude, some markets. Stay tuned.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&Ps right now. You're positive by 5 points in the S&P futures. But, boy, you talk about some volatility already. Down to 39.14. We're trading right now at 39.49.75. And, folks, we're going to jump over and talk to our man Teddy Kegstad as we do every Wednesday. And you can read Teddy's report, folks, the Tiger Forex report. He comes out with it every week on Monday mornings. He comes out with updates when warranted through the week. You head on over to the newsletter tab at TFNN. You can subscribe, folks. It's $97 a month. That comes with the money-back guarantee, folks. You subscribe for 30 days, you're unsatisfied, you don't use it, it just doesn't work with your trading style for whatever reason. You cancel, you get a money-back guarantee. When you sign up, you also gain access to a recent webinar Teddy did, 60-minute webinar, Forex Strategies and Fundamentals, what is behind the Tiger Forex Report. A great webinar Teddy did. When you sign up, you get the report for a month, you get the newsletter, you get the 60-minute webinar. You can't go wrong. And, boy, we got some action in currencies. We got some action in crude. Teddy Kegstad, good morning.
Good morning, Tommy.
Boy, we got a lot of action, Teddy. I can't help but say what's going on in that crude market with the volatility we've been seeing. Where do you want to start as we chop around this morning?
Well, we can start with crude. Obviously, they're banging the lows. The bears are very happy, and the bulls are scratching their heads right now. So I think one of the biggest things is supply is good, and the demand is actually not that strong. I think that's one of the things that are suppressing crude prices right now. I'm still a bull. I think that this is just grinding a bottom out, and I don't think it's going to maintain its lower bias over, I would say, definitely the next few weeks.
Hey, I appreciate the take, man. I got the chart up here right now, even on a weekly basis. We're talking about, we just made a low, man. Pretty remarkable, 72.75. And as a consumer, Teddy, in terms of demand, I'll tell you, when I see these prices, right, I say, man, I'm going to go fill up my gas tank, man, because $72 for the price of crude seems like a bargain in terms of a risk-reward portfolio of where it could be. Pretty remarkable, the pullback we've had, though. If you're looking at that market as a buyer, I know you cover it in the Tiger Forex report. Maybe you could talk to us about some of the levels as we come down. I mean, boy, a $10 pullback, man, pretty decisive. We reached $72. Is this an area that you'd be maybe potentially looking at for some buys here? If you're looking for that, where are you looking for on the upside? Talk to me maybe a little bit about some of the levels, because I think it's $74 risk reward. I'm not a big crude trader, but as I said, as somebody that buys gas, man, 70 $74, and I know it's not exact translation of what I'm paying at the pump, but it does matter. Boy, I see a risk-reward balance that I like at $74 right now.
Yeah, I think you got to be a buy break scenario right now because you have to be very careful with your risk. I think that for sure that any upside potential outweighs any downside potential right now. Like I don't see crude, even if it was to break another $5-6, that would be a spike low. I can't see that grinding and holding down. You know, we're heading into winter and we've had a pretty mild start so far. I mean, like I'm in Chicagoland, man, and it's like 40 degrees, which is beautiful the last couple of days. I mean, that sounds pretty cold to you in Florida, but for first week in December, we're usually at like, you know, I mean, the upper 20s, sometimes bobbling down towards zero already, you know, for the cold temperatures. So I'm liking it. I think that right now it's a tough trade without a doubt, and it's tough to be a bull, but I'm looking for definitely it to bounce back up and get above that $80 mark. You know, I think it's very, very unlikely that if it does get down and stay in these lower 70s that it's going to hold. I think it's really going to start to lift again. So especially you can see with the currencies too, like right now, oil is not having such an impact, but every time oil starts to get a rally, you can see it affect the yen, and it does start to impact the currency markets, you know, and that's where I think you really have to be tight. If you're a bear, keep your stops tight, because if you're going to think that you're going to be in a sell rally situation right now, I think that you're going to be, I mean, the short-term trend is that, you know, it's making lower move lows and lower move highs, but that's only on the hourly and the short-term daily. If you're really looking at it on the longer term, at best, we're setting up a range trade situation for crude right now, and that's where you got to be careful trying to be a bear, because if it's not a true bear market, this is where bears start to get slaughtered over the next couple of weeks, especially as we come into rollover for December and also the turning over of the year into wintertime as well.
And could you talk to the listeners, Teddy, because you've covered it many times, and boy, this is one of the best educations I got from you early on. We started having you on many years ago. But in terms of crude and the producers, right, and the demand and the supply, and when you look at especially the dollar versus the yen and how the U.S. is a producer, could you just go over for the listeners and the viewers real quick, for those that haven't heard it, in terms of how that relationship works? Because I think just understanding the fundamentals of that market in terms of crude, the price of crude, how that impacts the dollar, and especially how it impacts a currency like the yen, which has such a different part of their economy in terms of the production of crude versus like us, America.
Okay, yeah, well, especially with Japan, that's a very good case example, because as an ally, we also kind of guarantee Japan, meaning that they buy oil on the open market from all over the place. You know, I mean, they even buy oil from Russia, for Christ's sakes, you know. So, but the reality is we also protect them in the sense that if there's shortages or things like that, they know that they can rely on the U.S. as a supplier, you know, so or at least they have been able to in the past. So the price of crude is very indicative of where the yen can be when it's trending. And we saw a lot of that over the last year and a half, where especially because of the interest rate differential, you know, and then you had the crude oil differential also, that made the yen become very, very weak, you know, because you got to remember that you're not buying oil in yen to begin with. You got to convert the cash. And then also you had the interest rate differential that slammed the yen. So your buying power also decreased. So every time crude especially would go up, that would hurt the U.S. dollar yen because, or excuse me, the yen, meaning the yen's a bear and the U.S. dollar yen would go up, you know, because that starts to add the value on the dollar side. So that's where crude oil definitely has an impact on currency markets, which then also flutters into other things, because you got to remember, Japan's a manufacturing country. And oil is something that they rely on for manufacturing. So it's not just automobiles. That's only one portion of what they need oil for. They need oil because they're a mass producer of you know, hard goods, you know. Sure. So that's why that really impacts the Japanese yen currency especially.
It's a great breakdown, man, and it makes so much sense when you break it down like that. You know, the price is going up, we're selling it, they're buying it. Of course, it's going to translate into it, and then you just go down the rabbit hole of the, you know, effects and impacts that can have down the line on the economies and the currencies and yields, et cetera, as we're all seeing. What do you want to jump to next, Teddy, in terms of currencies? I know we got, you know, all the currencies kind of just pulling back dramatically from the moves we've had.
Sure.
You got the euro at 105, man. You got the dollar index basically at 105. You want to talk about the euro, the dollar? Where do you want to jump to?
Well, the euro and the pound are the ones that are the strongest in the dollar index. Now, the dollar index hit a nice spike low on Monday. So Monday and Tuesday, the dollar was strong. Obviously, today, it's coming back. Now, one of the reasons I think it's coming back also is that it's kind of a profit-taking break right now. You have to realize that the interest rate market was much lower earlier today and overnight, and then they started a rally this morning as we opened up our markets. So that's kind of hitting the dollar, and I think it's more of a profit-taking move. I would key off of the low in the dollar index from Monday. If that low gets taken out, well, that's obviously bearish because you're making new lows. That's intuitively obvious. But I think right now that's a good pivot point that is, if we hold above that, if we don't break through that today and instead a new low, I would be very cautious trying to sell against the dollar. I think what you're seeing is a profit-taking move. We're heading into the Fed meeting. It's unlikely that we're not going to see a rally in the dollar over the next few sessions.
Teddy, I appreciate the education, folks. You heard it right there. Check out the Tiger Forex report, folks. Absolutely great. Teddy, I appreciate the time, man. We'll talk to you next week.
Sounds good. Take care.
Okay, man. Have a great one. Folks, stay tuned. We'll be right back to finish up the show.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks, and so much for that rip higher. We got a rip lower going on in the markets, man. You're back to negative prices across the board with the S&Ps down by 13, NASDAQ 100 down by 87. You get the Dow off by 80. I'll tell you, folks, I'm a big Amazon bull, but Amazon's having some problems, man. I was going to order something today, and they literally, I know AWS had some problems yesterday, and for the first time ever, I'm trying to order 2 different items. I got some overnight diapers, and something else in there, and Amazon's saying we're having problems right now, and I can't even order it. So watch out for Amazon, man. Just trading low with the market, but be aware. First time I had seen that in a while. Now, folks, we got quite a treat, okay? We've been talking about the TFNN holiday Tiger Dollar sale. That's going on through Monday, all right? That's running out. What do we got? 5 days left? 5 days left of the Tiger holiday sale. But our man Basil Chapman, folks, he's got a special event going on a week from tomorrow, okay? We're announcing this today. Basil's going to talk about it on his program. And for the first time ever at TFNN, folks, Mr. Basil Chapman, our man, is going to be doing a live trading webinar, okay? He's going to have a focus on the E-mini S&P futures, but he's going to be trading whatever's moving, man, whether it's gold, crude oil, natural gas, maybe some of the ETFs that the traders out there like, the 3 times long, 3 times short sector ETFs, maybe some low price stocks. He might be taking a look at some consensus requests. It's a week from tomorrow. He'll be going over Chapman wave techniques as well, okay? Folks, space is limited because we host these in Discord, okay? We don't know what the turnout may be for this, folks. Basil's never hosted one. He's an outstanding educator. I can't wait to be in this room myself a week from tomorrow. And the best part is, folks, December 15th, it's going to be the day after the Fed, so you might get some volatility. You're going to have retail sales that morning at 8:30. You're going to have jobless claims, continuous jobless claims at 8:30 that morning as well. The event's going to take place from 8:30 till 2. It's $295, folks, but you get a month of his newsletter, which is $149. The whole thing will be archived. If you're a current subscriber to his Chapman Wave opening call, I mean, it's a no-brainer anyway, folks, but you're already paying for the newsletter. You get a month of that as well. It'll be archived. Folks, check it out, man. I'm excited for this. Basil has been putting this together for months, folks, okay? A week from tomorrow, Thursday, December 15th. So buy some Tiger Dollars and then use them for Basil's webinar and all the newsletters to add those savings. Thanks so much, folks. Stay tuned. Basil's up next, folks. We'll talk to you tomorrow. Have a great Thursday.